Hi, my name is Avi and welcome to my property channel. So today we're going to discuss a first-time buyer investing in property, what you must know before you start. Let's start. Number one, why should a first-time buyer want to start with an investment and not to buy a property to live in it? That's the first point what we're going to talk. In my opinion, if you have the possibility to buy to live in first, a property to live in, for sure you should do that. But if you don't have enough money to buy a property you want to live in and you want to first buy a property to invest, it can be a couple of reasons why. Let's say you're 19, 20 years old, you're living with your parents and you don't need a home yet, or it can be also you're living in London or other expensive areas in the UK and you can't afford to buy £1 million house or whatever it is, and you can afford to buy £100,000 buy-to-let investment in a cheaper area. So it can be possible that you want to buy first for investment and not to live in. Again, a lot of people will say it makes more financially sense to buy investment and not to buy a property to live in. I personally think that the feelings which comes with buying your own home to live in, it's like such a great feeling that you always want to buy your own home to live in first. But again, not for everyone it's possible. Let's talk the points. If you're a first-time buyer and you do want to invest in property and you don't want to own your property to live in first, you want to invest, that's the first thing you want to do. So let's go step by step. First of all, how much money do you need to actually buy a property, a buy-to-let? So number one, it's deposit. So a typical lender, a typical bank will give you a maximum of 75% loan to value. So let's say you buy a property for £100,000, you have to put down £25,000 and £75,000 you can lend from the bank. Most lenders will do that. There are other lenders who will go up to 85% and you only have to put down 15%, but again that comes with higher interest rates and it could be better credit rating and other stuff which you have to be aware of. So let's talk typical. Most mortgage lenders will use 75% mortgage and 25% you have to put down your own money. That's number one, that's the biggest cost what you have. And then you have another couple of costs. So stamp duty. You have to be careful about stamp duty. You have to know how much the exact amount is. It depends on the property price, so make sure what the figures you have, how much you're buying for, and then you'll know how much the stamp duty is. Then you have solicitor fees. Again, you can have solicitors with maybe, let's say, £100,000 property. You can have solicitors who will charge you £600-700, but then you have other solicitors who will charge you £2,000. So just make sure you get a good solicitor, but also make sure you have the right price. Then you have valuation costs. A surveyor coming down to the property, the mortgage, the bank will send a surveyor to the property. A lot of lenders will have free valuation for certain products. Other lenders will ask you to pay, let's say around for £100,000 property, let's say around £200-300 for valuation. And then you have mortgage broker fees. Again, you have mortgage brokers who will do free of charge, they'll just take commission from the lender, but then there are other mortgage brokers who will charge you, let's say, around the £500. And then you have a property sources. So property sources, if you don't have the time to source for property, to go on Rightmove and to make viewings and to negotiate with a vendor and all those kinds of things, and you want to take someone just to find your property, they'll charge around £2,000 to £5,000 for £100,000 property. And then you have to check if you need refurbishments before you take in a tenant, can also cost you. So those are the main costs which you have to be aware of. So it's the 25% down payment, stamp duty, solicitor, valuation, mortgage broker, property sourcer, refurbishment. Now let's go to the next point. How do I find a good investment property? First of all, Rightmove, Zoopla, you have hundreds and hundreds and thousands of properties all over the UK. Can you find a good property on Rightmove, on Zoopla? I believe you can, and it doesn't need to be off market to be a good property, a good sale. That's my opinion. You can find very good properties below market value. You can find normal, very good residential properties on Rightmove, Zoopla, all those other platforms. If you do use a property sourcer, let's say you don't have time for Rightmove, you don't have time to go down to the property, you don't have time for all those things, and you need to go with a property sourcer. First, you have to do due diligence on the property sourcer. Does he know what he's talking about? Is it not a scam? Do you need to put down a deposit for basically nothing before you start? You just need to put down £1,000 to secure the property, and he's not giving you anything, he's not committing to anything. So just be careful that it's a property sourcer who you know, a friend, a family, or someone you can really trust. A lot of property sources will just go on Rightmove and they'll send you a link to the property and they'll say, hey, I found your property, give me £5,000 for this. Be careful basically what you do. And let's say a property sourcer came to you, it doesn't mean that the property sourcer has the knowledge that you're able to get a mortgage on this property. Maybe the property sourcer knows the area, knows the value from the property, but then when it comes, you have, let's say, only £25,000 to put down as a deposit. Will you be able to get a mortgage for this? So if a property sourcer gives you a property for £100,000, before you commit to anything, take the address and everything, go to a mortgage broker and ask him, is it possible to get a mortgage for it? Is my credit rating okay to get a mortgage? And ask a family member, a friend who you can trust, and see if it's really a good deal. So it can save you a lot of money if you do this due diligence. I had a lot of stories where people just messed up and put down deposits and lost it, and that's it. So be careful. Then another thing, if a property sourcer gives you a property which is off market, that's not on the market, it's not on Rightmove, it's not on Zoopla, it's not with an estate agent, a few points which you have to be careful. Number one, it can be a back-to-back sale. Back-to-back sale means that, let's say this property sourcer bought this property 2 months ago for £80,000. He's selling it now for £100,000. That means a back-to-back sale. Back-to-back sale means that you bought it less than 6 months ago and you're selling it within the 6 months. That is called a back-to-back sale, and a lot of lenders, banks, won't give a mortgage for those properties. So be careful. That's number one. That's for aftermarket properties, just be careful. Then there's another thing, let's get into another point. Auction properties. What you have to be careful, you're a first time buyer, first time landlord, what do you have to be careful when you buy through an auction? Number one, most auctions will ask you to complete the purchase within 28 days. Most lenders won't give you a normal standard mortgage and be able to complete within 28 days. So that means you'll need to complete, you'll need cash, £100,000 to complete, or you'll need a bridging, which costs a fortune, and you have to make sure that it adds up with your investment. And there's another thing, a non-refundable deposit up front. So if there's any issues later, you're losing the deposit if you can't complete within the 28 days. A lot of times you won't be able to send a surveyor to the property to make sure that everything is okay. It might have cracks, it might have other problems in the property, it might be unmortgageable, non-habitable, it might be a lot of problems with the property if you buy with an auction. There's a reason normally why the property is at auction. If you're an experienced landlord and you have the cash and you know how auctions work, it's a different story. But I'm talking now to you as a first-time buyer, first-time landlord. So I would avoid auction properties only if you really know what you're doing, because you can lose money. Be careful. Now, let's go to another point. What type of property can a first-time buyer actually get a mortgage on? A first-time buyer, first-time landlord, you don't own anything. Most lenders will only give you a mortgage for a standard residential property, not a multi-unit. Multi-unit means there's a couple of flats in one property. Most lenders won't give this for if you're a first-time buyer, first-time landlord. Again, you'll find a couple, maybe get a couple of lenders, but it'll be much more difficult, higher interest rates, so be careful. I would avoid it if I'm a first-time buyer. HMO, that's a house of multiple occupation, or commercial properties. All those kinds of properties I would avoid if I'm a first-time buyer, first-time landlord. Just buy a normal single residential property. Again, maybe you'll get a mortgage, but it's more difficult. Higher interest rate, just make sure before you commit to anything. Another thing, it has to be habitable. It has to be in a livable condition. No missing kitchen, bathroom, or fire damage. It has to be in a livable condition. So make sure you buy a property which is habitable. And then another big point with it, which a lot of first-time buyers, first-time landlords have no idea, because they're new to the market, so they don't know. So avoid properties which is close to a pub, or attached to a commercial property, attached to a restaurant, train station, or attached to a commercial unit, or there can be a garage just opposite the property. It should be in a residential area. It shouldn't be attached or near all those commercial stuff. It'll make it more difficult to get a mortgage. So if you're a first-time buyer, first-time landlord, be careful. Normal residential property must be habitable and avoid close to commercial units. Now the last point, what about income requirements? So most first-time buyers, first-time landlords will need to go through an affordability test. It's like basically you're buying a first home to live in. So most lenders will give you about 4.5 times your income for a mortgage. So let's say your income is £20,000 a year, you'll get around £90,000 mortgage. Again, depends on credit cards, personal loans, credit score, missed payments, default, CCJ, depends on loads of things. I'm just saying more or less 4.5 times the income. For experienced landlords, it's different. For experienced landlords, a lot of lenders will give based on the rental income. They don't need to have a affordability test. So it'll just go on based on the rental income. So it's different. Most first-time buyers, first-time landlords will have to go through affordability test. Not all lenders are like this. There are 2-3 lenders who will do even without a minimum income. So even if, let's say, you have only £12,000 a year, £1,000 a month income, and you have this 25% put down, let's say a gift from a parent or whatever, you might be able to get a mortgage, but it's very limited. Finally, let's wrap it up. A reason why a first-time buyer should buy an investment: living with parents, live in an expensive city, can't afford, want to start investing in properties. How much money do you need? 25% deposit, stamp duty, solicitor fees, valuation, mortgage broker fees, sourcing, and refurbishment if needed. Where do you find good investments? I believe Rightmove, Zoopla. You can use a property sourcer. Just be careful, make your own due diligence. Is off-market always better if you find a property off-market? I don't really think so, but a lot of people do think so. So if you do find off-market, just make sure everything is okay, and it shouldn't be a back-to-back sale and everything should be fine.